Hey everyone.
Sorry, little technical glitches there.
Last week it was Cox. Today it's us. So
Anyway, welcome everyone. We're happy to be here with you today.
yeah, hard to believe that we are only a couple weeks, 3 weeks away from Thanksgiving. Less than 3, I guess now, technically.
Yep, and in November, which is just crazy.
Yeah.
Not sure how that happened.
Yeah, year flew by. And so, looking forward to see what Black Friday deals are out there this year. I think we're going to be looking specifically for some of the on-demand services since that's what we tend towards. You've probably already seen it, but Walmart Plus about a week or so ago, hey Nancy, announced that a deal where they're currently half off. So making it $50 a year, which also includes Paramount Plus Essentials, and all the same deals as we've gone over the last few weeks are still out there. YouTube TV, still $50 a month for the first 2 months. Hulu Live through the 19th, so about another week and a half. At its $60 a month rate for 3 months. Fubo still at $20 off a month for the first 2 months. First month. And DirecTV Stream is still at $15 off for the entertainment and for the first 2 months, and $20 for the first 3 months in the higher tier plans. So those are still out there, and it'll be interesting to see what Black Friday deals we'll see. And don't forget, if you took advantage of any Black Friday deals, to think through if you want to cancel those before they go up to their current pricing. I know we have calendar reminders that we put on our calendars, so we'll be doing that here in the next couple of weeks. So yeah, just make sure and do that if you don't want to keep it at the standard price, and maybe hopefully you can snag a deal on Black Friday.
Yeah, I've been getting some emails from Hulu offering $2.99 a month for 6 months as well. Ad-supported plan, of course.
Yeah, and sometimes the service will extend the same discounted rate to you when you go to cancel. So keep that in mind and watch out for that. We've got some news that we're going to go over for the week. A couple of them were stories that we were going to share last week, but largely ones that came out this week. And so just wanted to give an update on Venue. Venue, as we all know, and we've discussed, Fubo and them have been going back and forth in court. And Fubo filed a 70-page document this week on Monday outlining its response to Disney, Fox, and WBD. And in the filing, it accuses the 3 companies of consolidating rights to more than half of all U.S. live televised sports content, blocking out other competitors. And Fubo, in it, they highlight that the joint venture would be the only distributor able to carry sports content without also being forced to carry unwanted content. And the joint venture would substantially lessen competition in the live pay TV market, and in their argument. Key in the filing, and this quote here I thought sort of stood out. Fubo says, quote, "As a condition of licensing that content, defendants now force distributors to carry other unwanted content. Under defendants' anti-competitive agreement, the joint venture would become the only distributor able to carry their sports content without also carrying and paying for their other content. That exclusive access would give the joint venture a built-in advantage over every other distributor, a manufactured pathway to instant market dominance," unquote. And so that is, interesting to see. I would agree with them to a certain extent, but also Fubo is not completely innocent in this. They have their own issues, and the trial date is still currently set for October 6th of 2025. So, 11 months from now. And but also key this week that came out about Fubo is that analysts covering the company expect them to post their final loss early next year before turning a profit of $2.8 million in 2026. And the company is predicted to break even approximately 2 years from now with an average annual growth rate of 60%. And given their high debt-to-equity ratio of 141%, that requires more stringent capital requirements. And their stock hasn't been doing too hot, has ranged over the 52-week range of $1.10 to $3.81 a share. And so, obviously, what's going to happen with Venue could potentially impact that, their ability to make money. But yeah, I would be interested to hear what others think in the comments. Again, we can see both sides of the argument, but I think what we'll be telling is if any of the three companies step out of this, and I would anticipate that being Disney before anyone else, given that they have their direct-to-consumer ESPN app coming next year. And hey, Space Ghosts, hope you're doing well with the hurricanes that hit y'all recently over the last month or two. But I would agree that if something doesn't turn around for Fubo and a Venue continues to go forward, Fubo is going to be in trouble, in my opinion, pretty significant trouble. Yeah. And they did do it to themselves. I would agree with that.
Yeah.
So yeah.
Yeah, so let's shift gears a little, look at something just more not newsy so much as a feature that has been added. So Disney Plus has changed its homepage layout a little bit. Go ahead and show you it live here. So this is in my Disney Plus account. So when you come to Disney Plus now, you scroll down a little bit on the homepage there, and you will see a new top 10 row. So, obviously this is something a lot of other streaming services already have. Disney is just maybe a little late to the game, but finally doing it. So, they're saying they're doing this to help subscribers discover new content, make it easier for viewers to find, titles they're most interested in. The rankings are not solely based on viewership though, which is, good, because I can't imagine these being the actual top 10 most popular titles on Disney Plus right now. But it is kind of based a little bit off of your, wrong, 1 second. Where I wanted to get back to. It is kind of based on your viewing patterns, location, popularity of titles. They sort of have an algorithm for this top 10. It's not going to be available in junior mode if any of you have accounts where you're using that for real young ones. And it will vary depending on your profile settings, parental controls, if you have Hulu, all of those things. So I guess better late than never for Disney. If you haven't been into Disney Plus for a while, now you can use that and see if it helps you find things to watch more quickly there. Yeah, and thanks, Space Ghost. Glad to hear that you did well. My mom and her husband did well. They live on the higher elevation area of Crystal River is where they live. They did fine. The other half of town didn't do so hot, but other than that, they did fine. And thanks for pointing that out about my free DirecTV, Raymond. We've not been able to test it out yet, but I'm planning on doing that here very soon and see what that's like. So next, we were going to cover this last week, and there's not been a whole lot that has come out new about it this week, but the Dish DirecTV merger is reportedly hitting snags. And as we discussed in our last live stream, DirecTV agreed to take them over. It was $1, I believe, what it was. Now the snag is involving unsecured Dish debt of $2 billion. And this move has created friction amongst Dish debt holders who are already not really happy with the deal. And talks with creditors have devolved into a dispute that threatens to upend the nearly $10 billion deal. And again, it's that $1.6 billion loss
DirecTV has sweetened its offer to Dish bondholders to aid in merger talks, and the updated offer increases the exchange price for notes held by disgruntled bondholders by as many as 6.5 percentage points. And a group of investors representing creditors holding $8.9 billion of Dish bonds deemed the revised offer inadequate, and it would reduce the minimum losses on the bonds by $70 million to $1.5 billion, but still considered unacceptable. DirecTV has reportedly rejected earlier offers from bondholders and threatened to walk away from acquisition if an agreement is not reached. And investors have until November 12th, so what's that, Tuesday. So they have up until this upcoming Tuesday to signal whether they'll approve the modified terms. And with the deadline looming, it remains to be seen whether Dish and its creditors can bridge the gap and reach a compromise. And so there's a lot of numbers there. And really, a lot from what I read, a lot thought that this was going to be, the sort of I guess, saving Dish, given all of the debt that they have, and making it a pretty, I guess, in today's age, a pretty formidable subscriber base. But if this doesn't work out, and obviously this is speculation right now, given that the deadline is Tuesday, if DirecTV walks away or they're not able to come to an agreement, it could spell significant trouble for Dish. And I've seen a lot of speculation on what it means if they are able to come together and find an agreement. What's going to happen with Sling? I've not read anything specific on what their guidance would be. Hopefully it doesn't go away, because I think for the price, it's a relatively good platform, and it's in today's market, it's an affordable way to get some sports and some news. But yeah, we'll be more than likely discussing it next week, since the deadline is upcoming on Tuesday. And I would agree, Raymond, I would expect to see more consolidation, since there'll be likely less regulation that will be coming. And hopefully they're able to come to a deal. Otherwise, who knows what that would do with Dish, what it would do with Sling, and so forth.
Yeah, definitely.
And yes, we will be watching Yellowstone this Sunday, and thank you for bringing that up. I can't remember if we put this in our video or if it was out yet or not, but it'll be on Paramount Network Sunday. I think I read it's 8 Eastern is when it runs, and it's going to be running on CBS like an hour or two later if you don't have Paramount Network.
I sure hope they have a backup plan, Paul.
Yeah. Yeah, hopefully it's not for them. Hopefully it's not bankruptcy.
Yeah, right. No kidding. Yeah. Okay, so let's go ahead and move on to another item now. As Raymond put their mergers perhaps more likely next year and the years to come, but also maybe some separation of big merged, like Comcast exists in its current form after a series of mergers, and now there's some chatter that they might be looking to break off their cable networks into a new publicly traded company to better position themselves in the changing media landscape. So the new company would include cable networks like Oxygen, True Crime, Bravo, MSNBC, CNBC, USA Network, E, Sci-Fi, Universal Kids. It's the spinoff, if it happens, is kind of being seen as a way to, excuse me, I lost my place. It's kind of being seen as a way to uncouple Peacock from NBC Universal sports properties. And, Peacock and NBC sports, Peacock has actually done pretty well even after the Olympics. They got a lot of signups, and some of those have stuck. That has been encouraging, I think, to NBC Universal. If they do spin off all these cable networks, it allows them to get some of the most distressed assets off their books. Helps them from a business perspective. Maybe it leads to more consolidation in the linear TV side of things as well, if those are off their books. It does face challenges For starters, NBC as a network, that's do they need to separate that and MSNBC? And then how are they going to address the overlap between their cable networks and the content on Peacock? So just something to keep watching as we see the space changing.
Yeah, and then I read this week that, I don't know if it was Comcast CEO, someone high up with Comcast said that they didn't, when they launched Peacock, they didn't even envision it to be a sports streaming service or include sports in the streaming service, and it's obviously grown to where it has a fair bit of sports. And just some comments. That's a very fair point, Raymond. If DirecTV and Dish do end up merging, Sling TV being rolled into DirecTV Stream, and personally, I don't know. It makes sense just for pure expenses for cost. But as I said, Sling is an affordable option, and Space Ghost, I totally get what you're saying. In terms of Sling being more, since if you have to more than YouTube TV, and not getting the locals. We actually did a video. We just recorded a video right before election day, actually, on the click to cancel. Given the election, I don't know that it'll go through all the way, that it'll stick, but it could be pretty significant to companies, especially cable companies. Everything I've read has been particular to streaming, but I'm not. So yeah. I'm not very optimistic that it's going to stick, given how the election came out, but yeah, time will tell. Yeah. And so next is Paramount announced their earnings today, and they are still going through the merger, and some interesting things have come out with that. Paramount Global, it came out this week that they engaged with merger talks with WBD for months before they ended up coming to an agreement that they did. And the discussions reportedly began in December of last year and continued up until about March of this year, when Paramount decided that they were sharing too much information for their liking. They were sharing too much financial information. And Zaslav, WBD CEO David Zaslav, expressed continued interest, but talks fell apart. And they, as we discussed for weeks, they also held discussions with other partners, including Comcast, media mogul Byron Allen, Apollo Global Management, and Comcast was interested in a licensing deal or a joint venture rather than a full merger. And so that's, the merger came down to Skydance. And so what came out with the earnings today is it came out this week that Sherry Redstone and her son will likely be leaving the board, although they've been given the option. And so why do we care? And I'm going to get to the earnings here too. The merger with Skydance is seen as a significant turning point for Paramount, which has struggled with declining linear TV assets and the high cost of streaming. The deal is expected to bring in $8 billion in investments, with Skydance planning to invest significant amounts of money in Paramount's streaming operation. The merger will also provide a fresh start for Paramount, which has been managing through a period of significant decline, and that's where the earnings comes in. Paramount added 3.5 million new Paramount Plus subscribers, but the company continued to see significant declines in its TV and media and film business, and like other companies in the space are continuing to struggle with their linear TV and with film. And in the earnings call, the company said, quote, "We feel good about our position and our ability to remain a standalone," unquote. And so this, I foresee, what Nicole just mentioned about Comcast, it'll be interesting to see if Paramount keeps all of their linear networks or if they try to sell them off, because they're starting to see profit for Paramount Plus. And so what are they going to want to do with all of their linear networks that they hold, their film business? And Skydance, as I just said, wants to invest apparently $8 billion in Paramount Plus. So it could potentially lead to, if they don't consolidate with someone and they do continue with what they're claiming as a standalone, is it going to lead to more licensing deals and content not being where it should be? Paramount Network stuff. So it'll be interesting to see what happens with that. I don't know that I necessarily see them remaining as a standalone, but with this influx of cash, that's going to aid them, supposedly. They would argue.
Yeah, speaking of an influx of cash, our next topic is about Netflix. This was interesting. I thought we saw this article declaring that Netflix has won the streaming wars. Obviously, you can see this is Yahoo Finance, and that declaration is really being made based on their financials. So Netflix actually outperformed what Wall Street was expecting of them across a major financial metrics that has their share price surging to all-time highs. Netflix added more than 50 million paying subscribers since launching its password crackdown in May of 2023. And just, its full year operating margins are going to hit 27%. It pulled in roughly almost $7 billion in net income. So, I guess if you want to argue it, did they win? I guess they did. And who's pulling up behind? Right behind them, Disney, Paramount Global, we were just discussing. They actually reported their first quarter of profits in their streaming businesses early this summer. So we are starting to see everything shift in the streaming industry towards them all the leaders at least getting profitable. So because of that, analysts are declaring Netflix the winner of the streaming wars. But, Netflix is so big. Let's talk a little bit more about some of the ways they've been in the news. So co-CEO Ted Sarandos discussed Netflix's approach to a range of topics, including generative AI, live sports on Netflix, advertising, more live events on the platform. He mentioned that he believes Netflix is in the live events business, and he sees value in bringing people together to watch the same thing at the same time. I have to chuckle a little bit because, that was cable, 30 years ago, or network TV before that. I mean, I can remember being in college and getting together with friends to watch Seinfeld and Friends and things like that. So it's just kind of funny to see it coming full circle. But yeah, well, I guess, we can keep watching if Netflix does bring more sports, if they have this money to spend.
Yes.
It could end up giving maybe greater value to us subscribers as we get more live content for what we're paying per month for that. So yeah, there's all of that. And then another topic here to kind of cover, it's not necessarily about Netflix, but is about Max, that it looks like Warner Brothers Discovery, they did, announced.
Yeah,
you are. I'm sorry.
Yeah, that's okay.
Stealing John's thunder.
Yeah, and so to address a couple of the comments that have come through, that's a very valid point, Raymond, that YouTube itself, not YouTube TV, YouTube being winner of the streaming wars, and it's the second biggest search engine in the world, and so many people are on YouTube, and so it's definitely a valid point. It'll be interesting to see how that continues to play out over the next few years. Relative to David Zaslav, I'm actually going to be covering that, and let's see here, and also with the Dune series coming to Max, we'll see if they do a Black Friday deal. But with WBD, Zaslav stated this week that there is a need for industry consolidation to improve consumer experience and strengthen media companies. And he highlighted that the current setup of multiple streaming apps is not sustainable, and consolidation is necessary for a better consumer experience. And given what happened with the election, and it's very possible that we will see more appetite and more ability to have consolidation take place. He actually, Zaslav said this week that they are not splitting up WBD, and so their stock rose more than 15% in trading this week after reporting their streaming results. They saw its largest ever quarterly subscriber growth for Max with 7.2 million new subscribers. Streaming advertising revenue jumped 49% year over year, and the division posted profits of $289 million in the quarter. And the company expects revenue growth, profit growth, and subscriber growth to continue in the current quarter. But just like Paramount, they saw issues with the studio segment. Their revenue dropped 17% to $2.68 billion, with theatrical revenue falling 40% due to lower box office performances. As a part of the earnings, they also said that they are planning on coming out with a password sharing crackdown, and they're saying that they are going to follow very closely what Netflix did, and obviously with the numbers that Netflix saw as a result, they're hoping to see similar results. They announced that they'll begin enforcing restrictions on password sharing. They said that it's going to be a soft messaging, so that they're going to start emailing subscribers. They're saying by the end of this year, and that it's expected to be full implementation early next year, going into 2026. And they're wanting, so again, obviously trying to get at people that are borrowing accounts, and they're doing this to boost their financial performance, and it's seen as a growth opportunity for the company, because what did you say Netflix added 50 million as a result. So even if they can do something like 10 or 20%, that's going to create something positive for them. And then also teased in the earnings call was a price hike. They raised prices for the ad-free plans in June, but not for the ad-supported. And the company has raised rates twice in the last 2 years. Now, many would argue, and I would agree, that a password sharing crackdown is a price hike in effect, because it's causing people that are sharing to either stop or go get their own account. So it is raising prices. They didn't give any indication of when, just in the future. And it's again important to note that they did not do it on the ad-supported plan. So that was a win, but obviously, since that one has been longer, I would anticipate a price hike on that in the not too distant future. They typically do have some kind of Black Friday deal. Hopefully they will upcoming, and with the content that they're adding, they're going to want to have people on there. And if we remember back to Peacock right before the Olympics, they put out a price hike, and so they're going to do something to get people on and then raise those prices.
Yeah, and Raymond, they are trying to put people on ad-supported plans. They all are. And something else about Netflix, they actually are changing how they're going to stop providing subscriber numbers in their updates, starting with Q1, first quarter of next year. Instead of reporting on subscriber numbers, they're going to shift to revenue, operating margin, and engagement. And that really just shows you how and we've been reading about how Netflix has really maxed out the US audience. They're looking to add subscribers in other countries, but they have matured to the point where
they don't have to.
Right, and the strength of their company, at least as far as investors look at, is no longer how many subscribers are you adding, it's how much revenue are you generating, how engaged are they, how much are they watching, how much ad revenue, and that. And so yeah, we're going to see the same thing with Max too. I think eventually, you know, they'll all stop reporting on subscriber growth because we're all there now.
Yeah, and Netflix doesn't have to. And then with the NFL games that we'll be having on Christmas, if they are able to really turn that out well, that's further proof of why would they need to release subscriber numbers. There's be looking at those revenue numbers. Mm-hmm. So yeah, a lot have been going on in the streaming space, and yeah, Paul, I would say that K-State does have to win out in order to make the playoffs.
Definitely.
Our loss,
have to win the conference.
Yeah, our loss against Houston was pretty bad, and so we get Iowa State in the Saturday after the Thanksgiving week, and so we have to win out. Arizona State's not going to be easy, nor is Cincinnati. They
no. And for all
over 500.
For all our K-State fans out there who watch, next time you see us on a live stream, we won't be on.
Yes, we will.
Okay, well, we will be next. Sorry, we will be next Friday.
Next
it's my birthday next week, and I am treating myself with coloring my hair purple for the first time. I've never colored my hair, and I'm having my stylist do it, so it's not me in my bathtub. But you will see my K-State spirit shine on our next live stream, and hopefully that'll give the Cats a little extra lift to beat Arizona State on Saturday.
Yeah, and that's funny you say that Space Ghost. I know you've said that in the past, and I think that's the one service that we would, at least right now, would never get rid of. We're usually watching something on there.
On Netflix?
Yeah.
Yeah, I agree.
Nicole's going to rope me into watching Diplomat Season 2 here soon, so...
They have a good variety, and we still have the non-ad plan. So for now, at least, it's pretty more tolerable than all the others, I think.
Yeah, and I hope your Gators beat Texas this week. Space Ghost, that would be awesome.
That would be good.
Yes.
Thanks for the Purple Heart, Nancy.
Yeah, despite their bad year, I hope that they beat Texas.
Well, whoever you're cheering for, if your team is playing, we hope they win. Unless your teams are playing each other, then we're neutral. But thanks for joining us today, everyone. Have a great weekend. See you next week.